Nearly 1.3 million Canadians missed a credit card payment this year. Malls are being torn down and turned into housing, and AI, it might just become your new mortgage assistant. So, hey, don't fear the Reaper, but maybe start watching your debt load. Let's get into it.
It's coming for you, Sean. The AIs.
It's here, man. I'm using it every day, all day long. I'm on ChatGPT all day, but we're gonna get into that a little later, I think, aren't we?
Yeah, I think so. Mostly today, I think we're going to cover off some of the headlines that were, mortgage news, mortgage related headlines. There's some interesting stuff to cover. Let's roll the headlines clip. I love that. That's my favorite.
Nice. Like we know what we're doing here. So you were saying, so there's what I was said off the top is that young consumers are starting to miss payments, right? We're seeing what was it Equifax said, found that 28% of homeowners, 1.4 million consumers missed a credit card payment in the first quarter of this year. And that's an increase of 146,000 from last year.
Yeah, so
What's
Q1,
your
10% of young, and I don't know the stat for what defines a young person, missed a credit card payment. I mean, I don't know if we should be freaking out about this, but if it continues, maybe we should be freaking out about it. 1 month of missing a credit card payment is not going to tank your credit score, but if you're consistent with that, it certainly will. I don't think that means that we're taking a nosedive with the economy, but I think that there's a potential nosedive on the horizon.
It's possible. I mean, just to put it in context, in Q1 of 2025, approximately 24 out of every 10,000 Canadians were over 90 days late on their credit card payments, which is a rise in financial stress among consumers in Canada. But I don't think 24 out of 10,000 is necessarily that notable.
I don't
going
think we're
from 16 out of 10,000 to 24 out of 10,000. Like it's in the, you're telling me there's a chance.
What's all this 1 in a million talk, Sean?
I mean, it's not quite that, but it's, it is a fairly small group of people that are, 90 days delinquent on payments and in serious trouble. Certainly people are missing credit card payments right now.
90 days
line of
is
credit payments.
significant. Missing one payment or late on one payment, not the end of the world, but 90 days, you're getting yourself into trouble. If we talk about the dream of home ownership amongst young people, this narrative would certainly support the freak out if you're that younger generation. There's ways around it.
We're also seeing young people are most affected. They've got the least amount of discretionary spending. They've got the least amount of nest egg to kind of, to kind of try to be back on. So, I think it's a combination of like wages haven't necessarily grown that much. We've had, and it's certainly an increase in the cost of living. Wages haven't gone up, higher mortgage renewal rates, and people are just cutting back their discretionary spending. So it becomes a feedback loop, right? It's like, well, I don't have a lot of money. I'm not going to be putting that I'm not maybe going to go out for dinner, or I'm not going to buy something that I want. And then that turns into businesses feeling the pressure. So maybe they don't hire as much, or maybe they don't they don't increase wages, or they don't invest in a certain machinery or thing that they need. And then that further slows the economic expansion, which
ripple effect does.
It's a classic vicious cycle.
We're watching it right now in the housing market, where you have a slowdown that lasts more than 6 months. We're like on year 3 of the slowdown, and it gets perpetual eventually. That people's mindset changes. They invest in other places. Yeah,
Yeah.
we're feeling the effects from it now. But it always seems to some black swan event seems to come and turn around and whip it all back into shape on the other end of it. So for me, there's no long-term panic, but short-term impacts can have long-term results.
Well,
And I
and it
think they
does
looked at
happen yeah, it can happen all at once too, right? Like we're seeing, yes, it's 24 out of 10,000. That's not that many, but there are people that are doing they're doing less with less. Like they don't have a lot of money. This can start to spiral. I don't think we're on that breaking point yet, but in the housing economy, we've seen people really not making investments in housing as they were a couple of years ago. And I actually just want to point out that we had a comment on one of our videos last week. I don't know if you saw it, but basically saying like, hey, you guys are trying to stir up fear of the market and the music stopped. Everybody's gone home. Like, the housing market is dead, basically. I think that's exactly what we're trying to do. But I think, it's a good point. Like the housing market is a lot slower. What do you think? What do you think has to happen for the housing market to come back?
I guess, are we talking about the condo market? Like it may be worthwhile to specify, because we have looked at, as you zoom out, you're like, oh, the housing market, nothing's moving. And it's like, well, that's not really true. The condo market, nothing's moving in the smaller condo space. I mean, I think it's
Yeah.
a great time to dive in, but your financials have to be in order. Your own personal confidence and risk tolerance is going to, write that headline. I was talking to a friend of mine, and he said, I bought a condo. I was able to save up because I was living at home with my parents. And we're seeing a lot of that, like a lot of kids, young adults staying with their parents longer. So be
Yeah.
responsible. Take that as an opportunity. When the kids are freaking out that they're not going to be able to, purchase a home or condo or whatever, get into a property and grow their money. Be wise about the opportunities that you have. Don't sit at home in your parents' basement, kicking yourself or trying to beat up on the older generations for buying up all the property. Save your money, get a
Yeah.
job, be responsible, and you'll have those same opportunities as my buddy.
Well, I think it's a self-fulfilling prophecy, because I think that people think, oh, I've heard that young people can't buy and I can't do it then. And rather than actually looking at the details, a lot of people are more qualified than they think when I speak to them. It used to be that I would talk to people and they were like, oh, I want to buy I want to buy a 2-bedroom condo in Toronto. And that was my red flag for this person has no idea what they're talking about, because everybody wants a 2-bedroom condo. One, there's none of them in Toronto. They're all huge. And two, they're well above what somebody would typically spend on on a single unit. It's not like, oh,
Sure.
it's $800,000. And for one person to do that, it doesn't make sense. But now what I'm finding is that people are coming to me and like, hey, I've been sitting on all this money. I've been saving. I've got a great job. I just want to see, just for giggles, what is it that I could actually afford? I'm finding that people are surprised by how much they can afford now. They can actually afford more than what they were thinking. And so that idea that nobody can buy, it's not possible, that is not true. There are people that are very well qualified, whether or not they want to buy or not. That's the second piece.
Sure. And in that condo market, like that's where we're really seeing a drop in prices, right? Like let's say 3 years ago, I think I would estimate 3 years ago the lowest price point you could get into the condo market was like, let's say 520, 550. Now we're seeing stuff in the mid to high fours, right? So like the condo market has contributed a lot to the headlines, but it's also now sort of the place of opportunity. I mean, if Benjamin
Yeah.
Tall was right when last time we heard him speak last year, he said like, look, 5 years from now, the condo market is going to be the hottest thing. So at what point do you want to jump in if you're, sitting on the fence, or if you think that you can time the market? What are you waiting for?
Yeah. But that's hard for people to jump in and just think, oh, I'm just going to go in. I'll
I'm going to be the
believe that
first, right?
you know, when the evidence isn't there, it's hard to just jump in and be like, oh yeah, for sure, I'm going to jump into the market, and this is, I'm going to believe that it will always go up and it's going to be more and it's going to be worth more in 5 years. When the evidence before was, hey, last year this was worth 500, this year it's worth 550. The year before that, 3 years ago, it was worth 300,000 or 350. You can see that trend happening. But when it's going the opposite direction, it's hard to look at the 40-year trend and say, well, 40 years ago, this would have been worth $20,000 and today it's worth 500. That's a hard thing to like wrap your mind around when it's like, well, I don't know where I'm going to live in 5 years. Will I want to be here? Will I have a family? It's hard for people to like put essentially all their chips in the middle and jump into something where like, I'm hoping that it goes up.
Well, speaking of that, let's take a look at this, because I was reading that two malls in Montreal, Montreal's East End, are going to be turned into housing. It seems like a super cool project. There's some stipulations around what that has to be in terms of, it's going to have retail. It's like the Montreal, I don't know if it's municipally, want to have a sense of community built into this thing while it's going. And I wasn't aware that we have some projects like that in the GTA as well. And you made a massive fucking list, which sort of surprised me. But
it could have been longer too.
So I was looking at this and I was thinking, is Montreal making a play to, maybe steal some of Toronto's glory? Because Toronto stole it from Montreal back when, sort of when we were kids, when we had that big referendum. Yeah. So I know Montreal. I talked to another friend of mine who just recently moved back to Montreal because there's a little bit more affordability. There's some draw there. But it seems like, we're doing stuff here too. Do you think Montreal has a chance to dethrone Toronto in our, let's say, like over the next generation?
In our lifetime?
Yeah.
I think that Toronto, for me personally, I think Toronto is so far ahead in terms of business and investment, the types of businesses that are here, the strength of the city. I mean, it'd be great for Montreal to be a little bit more of a player when it comes to the economy and corporate investment. I mean, it's possible. Money goes where it's most welcome. So if Montreal and Quebec had some policies that were welcoming to investment, then that'd be great. Could they be a research hub? We were talking before we got on about maybe Hamilton being another research hub. Like, how could we take advantage of the current political situation in the US where we've got researchers and scientists and educators not welcome anymore? Can we take on some of those brightest minds? Montreal would be a great place to house them. Because then it can be an economic hub for developing some of these new ideas, new businesses. How can we make them welcome? We live in Toronto and Ontario. Not a lot of room in the immediate Toronto area, but some of these smaller towns, Hamilton, Peterborough. I've got a whole list of them here, but like,
well, let's take a look at the Hamilton headline. And let's get into that, because I think that you make a lot of good points. And I think that, I don't know Montreal as well as I know Hamilton, but I think you're right about it being primed for an opportunity for more than just personal investment into real estate. But this headline was more to do with, it said Hamilton is among 7 Canadian cities seeing a drop in home prices. So what caught my eye here was the affordability. It said Hamilton led the country in improved mortgage affordability in April, with the average price falling nearly $10,000 to $801,400. That means a buyer now needs $1,800 less income to qualify for a mortgage. So when I look at, I'm like, okay, so if you needed $130K to qualify for the mortgage, now you only need $128K. I'm not sure if that like drives people to Hamilton to purchase right away. But I think that sort of based on our conversation, I think that there's opportunity long-term in Hamilton because of the infrastructure that's already there. You know, I live in Scarborough. We don't have a walking sort of city at all. It is really a borough. It's a feeder to Toronto. And I think it'd be very difficult to develop that into the kind of walking city that would be great for, let's say, raising children. Not that Scarborough is not great for raising children, but when you think going for a stroll, seeing the shops, like essentially what makes Toronto great, Hamilton already has a lot of that.
I'm picturing you with like your old hat and your trench coat walking down the street and like looking in the shops from like,
with
the 1950s with a newspaper and like, good day, sir. How are you?
I love that vision.
But I think that's more realistic in Hamilton than in Scarborough is what you're kind of saying, right? Like it has a downtown core, it has a lot of culture there, but it's a city in transition, right? Where it was mainly a steel town before, but it has, as you said, it had the bones, it has the infrastructure, it has train station, it has a hockey team, I believe. Like there's a lot.
The CFL team anyway.
CFL
the Tiger
team
Cats,
is there.
But with a brand new stadium too. So I mean, there's investment there, which should be appealing.
I think it's the number. It's the example of a city or an area that Ontario should be doubling down on. Let's make it more than just individual investors. And I've been hearing this for probably decades now. Like, oh, you got to go to Hamilton. Hamilton's a great place to buy you can buy an affordable rental unit and rent it out. I mean, that helps, but it's not really developing it where it's going to be attractive for corporations to go, or attractive for, young professionals to necessarily live there and not have to maybe commute to Toronto anymore. Can we make Hamilton, Peterborough, Kitchener, London, any of these, Barrie, Sudbury, like any of these places with these walkable areas, OHL teams is what I call them. Like, they've got OHL hockey teams. How can we make them affordable, viable places for business investment and for people to go and live there?
Yeah, I mean, the prices have dipped a little bit, which is, I mean, $10,000 on average price dip.
There's opportunities there. But if you looked at the map, like there's places to buy.
Yeah, I mean, like we never want to cheer on a dip to encourage more people to buy, because if you're a homeowner, the idea of a dip freaks you out, and rightfully so.
Right.
But I mean, if there is more inventory available, but a big push from sort of provincial investment, a business investment, like we saw what Kitchener Cambridge area did with Research in Motion years ago, and then with Google recently. So business drives it all. And I think there is opportunity there. And I think the structure of the city of Hamilton is appealing.
Yeah. Can we get trains there? Like let's increase the viability of getting in and out of Hamilton. Make it a real hub. I don't know how far you want to get in the weeds here, but I started even thinking about like, what's the next tier after that, right? Like what are the cities that we should be looking at outside of those big ones? I made a list. Do you want to?
Yeah. So look at it.
Now that I've teed it up, I'm going to share it no matter what you say, I'm sharing it. So next tiers would be like Brantford. So it's affordable. It's near Hamilton in the 403. The Laurier has a campus there, has an industrial base, could support some light manufacturing, logistics hubs. I'll just list them off, then we can discuss them. St. Thomas has a Tesla supplier factory. Brockville is on the Via Rail line. It's halfway between Toronto and Montreal. And then there's Cobourg or Port Hope. It's right along the 401, really close to the lake. There could be Via Rail access there. And then you can think like the Niagara region, Welland, which is close to St. Catharines and Niagara Falls. And then there's, a bit further, what about North Bay? these places have some universities. So maybe these are university towns that we want to think of as well, but they've got walkable areas. They've got infrastructure there. How can we double down on some of these areas to create them as viable places? You take pressure off the city of Toronto and then all of a sudden the city of Toronto prices become more affordable because they're less in demand.
Yeah, or at least it flattens out a little bit, because buying real estate in Toronto is pretty wild. But some of those areas, Coburg, like fairly affordable. I've done some mortgages out in some of those areas with a lot easier to get into, which will help.
For sure.
If you've got jobs and if you've got industry and you've got affordable housing, you can really build it up probably in a hurry, as long as it's got the infrastructure for water and municipal services. Then those are great viable options. We could definitely invest more in our transportation, like such as our train systems, and not necessarily just to get everything filtering into Toronto, but if you can get from North Bay to Niagara on a train, now we're talking about really connecting communities and neighborhoods.
Yeah, like how can we make these areas viable for people to travel to, work in, live, raise a family? Let's lower, I know Mark Carney's been talking about like lowering the cost of building. So, things just cost so much to build that's why the prices are so much higher, because it's costing these builders a ton of money to put something in there.
I've always,
Pardon me?
what has he flagged as the high cost of building? Because I know that there are consulting fees, and there are multiple sort of engineering checkpoints that they have to get through.
Right.
But
So he wants to make it.
not a problem to have building standards, but if you have to at
Yeah, you
every
kind of need
level
those.
have an engineer on your roster, instead of like maybe having a better way of doing it, that it just costs so much money. Each step of these approvals costs so much money. How can you maybe streamline that a little bit without getting into building houses on swamplands because it was cheap?
Yeah. Well, I think Carney mentioned yesterday of cutting development fees in half. So any fees that are being charged, cut those in half. And then the other part was building, lowering the cost of building. So the actual manufacturing costs, make prefabricated homes more viable. So you're showing up, you're building something in 3 days rather than 3 months or a year. You're building some of these homes, you're showing up, you're putting the walls up, you're putting the roof up, and Bob's your uncle, we're ready to go, because all of the work has been done in the factory.
Right.
And it's just pushing them off an assembly line essentially.
Yeah, I mean, I don't know if that's desirable. When we get into these conversations about the small condo units, the 4 to 550 square foot condo units, those are what's sitting on the market. But it's probably more desirable than that. And I don't
Family
really
size
have a problem
housing
with it.
is, I don't think people care how it's built. If it's family size housing and it's affordable, like if it's a viable place to live. I think like we had, the wartime era houses were nothing special.
Sure.
Like
No,
they were
and they're
not,
selling in
big.
Toronto for 1.2 million. Like
Yeah,
those
exactly.
same houses. Bungalow style wartime housing. I
Yeah.
mean, yeah,
Because it comes the lot that they're on, right? Like that lot was not valuable when they got built, but now they're valuable now because there's a whole community and people want to live there. There's jobs
sure.
around there. But it took that initial government investment to build in those areas. Do eventually, building up some of those areas with these prefabricated homes, and then one day somebody tears it down 30 years from now and builds something even better. I think that's
Shovels in the
realistic.
ground. Yeah.
Yeah.
Build now, ask
As I said
questions
before,
later.
it's not just about shovels, but let's build the right type of property, family sized units. It's what we need. And that's what's going to make people be able to afford a home and want to invest in a home.
Sounds good to me. Now,
Let's do it.
I want this. We sit on very probably opposite sides of the table on artificial intelligence in general. But you wrote an article, put it on LinkedIn. I read it. I made sense to me. You want to cover that off a little bit?
Yeah, man. So I know I think I'm on the forefront of this, and at least compared to when I talk to other mortgage agents I know, and like how my thinking of where the industry is going. And I like to think about this big picture, what's going to happen next. Now, I think a lot of people are using ChatGPT. Vaughn, I'm going to get that on. I'm going to get you on it eventually. Oh yeah. It's like saying like, oh, I'm not going to use the internet. It's like that old man that like, oh, I'm not going to use this internet thing. Like this
Biggest
is
mistake in
going to
my
go
life.
away. Pardon me?
Biggest
Biggest
mistake in
mistake
my
of your life.
life, using the internet.
It's like, or like having a smartphone. Like we're not going to have, like I had friends that were like, oh, I don't need a phone. I don't need a phone. Well, now everybody has a phone. Everybody's going to have it. It's one of those things that will just silently overtake our lives. And so in one way, what I want to talk about is AI agents. Now, an AI agent is like having basically like a super efficient digital assistant, and basically acts on your behalf. So not just like you giving it search, like a search engine or like a large language model, like a chat bot, but actually like doing the tasks for you. So think about this. So ChatGPT is like a smart brain you can talk to. So I can give it feedback. I can talk to it. I can say like, hey, act like a coach. I want you to write me an article. It will just go and do those things. Whereas an AI agent, which is basically like that brain, but it's connected to tools. So it's connected to your email, calendars, document systems, and maybe even like lender portals. So it can take action without you actually like lifting a finger. So you can do review down payment documents, review income documents, manually qualify. Hey, this is how much income they have. This is what type of mortgage that would work with. The one that kills me is like, I have to like lie down to like rest up to do this, is like checking bank statements for down payment, going through all those statements.
It is definitely,
Like,
as you lay this out, if there were an AI assistant that could, because some of the clients that I work with have 5, 7, 8 bank accounts between them, and they're
and they move
moving
them all
funds.
around.
They move it from one to another to another to another in order to get to its final destination. And we have to go back, and we have to, in a lot of cases, look at 90 days of history to account for all this money, to make sure none of it's borrowed or other things, right? That this is their own money. And, in most cases it is. But even if the AI could provide the blueprint, I mean, what I do personally, I go through all of the documents, and I make an Excel spreadsheet. This date, this account, the money moved from here to there to here to there to there. And then I can present that to the lender and say, this is the story. Check it on your own. Even if AI could lay that out for me, and then all I have to do is verify it.
Yeah.
I think that's a great use of AI.
And that's exactly where we're going. Like, and not, this isn't something that's like, oh, can we do this like 10 years in the future? The technology is here right now to do it. It's the compliance and the security and the technology of like putting it into our systems that has to catch up, because all of those things are already available to do that. You could put those down payment documents, they could be uploaded, requested automatically, like within seconds, like less than a second, map out exactly what you just said. You can specify the format. Do you want it in an Excel spreadsheet? Do you want a written explanation? It could then go back to the client and say, here's what I'm missing. Or the next step is automatically talking to the client's bank, the banks, to get that information automatically. And that would all be secure. It's already pretty secure, but within Canada, we have our rules on like where information sits, who can access that information. It's a human barrier at this point. It's not a technology barrier.
Right. I mean, there's definitely concerns with security with anything. Online banking, there's concerns with security. Like data gets lost, accidentally shared, hacked all the time. So I don't know,
Sure.
like this is way beyond my expertise in cybersecurity, to
Right.
whether it's a good idea or not. But let's say that hypothetically it was closed, even if they weren't contacting the banks and doing the extra, even
Sure.
if they were just going through and you told the software, hey, any transaction of $4,000 or more, 5,000, 10,000, whatever you set the parameters,
Yeah.
you need to show me a 9-month paper trail,
Right.
even if you can provide
9
me
months,
with,
90 days.
sorry, 90 days,
Yeah.
9 months, 3 months paper trail. Even if you can just provide me with what I need to go back to the client with, then I can verify it. Because that's probably the most painstaking part of the mortgage brokering job is the down payment verification.
I completely agree. Down payment, income, and then being able to take that and put it into a format that the lenders are going to want. So if the lenders so imagine this scenario, the lenders have already within our system said, here's the documents that we need. Here's the down payment. We look for, some lenders want to see major deposits of $10,000.
Right.
Other lenders want to see $3,000. Like there's a bit of gray area.
There's a
Which
ton
one
of
is
data.
which? Yeah, there's a ton of gray areas. So we could then have that already laid out where this lender wants this amount of detail. That AI would then put it in that format for a submission to that lender and being able to outline it. Here's how they're packaged. Here's what the documents are named. And then eventually it's just an AI agent on the other side, that lender automatically reviewing things and then maybe having a human to verify that information afterwards. But it takes all of the work out of like all that monotonous like data entry and analysis. That is going away, and that's going to go away really, really soon. It's not something that we're going to be doing. I'm like, I can't wait, to be honest. I can't wait to not look at down payment documents.
Well, the software is there and it's been there for a long time. The implementation of it, it's probably implementation of it is probably there in certain areas already that we're not maybe fully aware of yet.
Yeah.
If you look at it like the AI is going to proofread this, then I don't see a problem. If you're like the AI is going to run this start to finish, that's where it gets a little bit hairy for me. It's like, well, what algorithm are they using? The AI can create best practices that aren't actually best practices. And once it's written in there as a best practice and the rest of it follows, if you've got like an open source blockchain style, the way that the software is written, you could be in big trouble. One little mistake could cascade into a big thing. But if the AI is proofreading it, if that's how we want to sort of shape it in our minds, then I can't object to that.
Yeah. Well, I think anybody that is in the mortgage business now that sees themselves as fulfillment or just reviewing documents, like that is a job that is going to be phased out, unfortunately. Because we will have technology and we will do it because it's just easier, because it's better essentially. As a human, I'm going to miss things. I'm going to miss pieces. I'm going to miss documents. It makes my job easier and faster. So it's not just like, for example, like we were talking about this before we got on the air, like pre-approvals, like they're fairly broken and we've just been okay with it up until now. How it usually works is we talk to a borrower, they send us information, they fill out their application, they send us documents, we review all of those documents, we review their credit, and then we essentially hold a rate for them with one of the lenders. The lenders, if they review the notes and if they review the documents, that's actually a step up. Most of them just hold a rate, do not review anything, and it's just a straight rate hold. If they review the application, it's a cursory look. They're not looking at in detail at the credit. They're not looking at any down payment, income, anything like that. And you can't blame them. It's time consuming and it's low yield. Like hardly any of them actually end up turning into deals versus like, so we're then giving,
and it's been abused
by
mortgage agents in the past too, because we have had lenders that will like fully underwrite a pre-approval. And what happens is agents go to those lenders, get it underwritten, and then shop it around once they know it's a safe deal.
Yeah.
So
it's expensive.
It de-incentivizes lenders to actually put that effort forward, which is too bad because we have seen it decline.
Yeah, I agree. And then then us as mortgage agents, brokers, we've reviewed everything. We're going and telling the borrower or the client, somebody who's buying a property, yeah, you should be good for this price point. And then, but we don't have verification from the lender. We have a pretty good idea because we're all professionals and we know what people will be able to afford and what the ratios are, what the gray areas are. But we're asking them to make the biggest major life decision based on a cursory review and a rate hold of their finances. Now, the best of the mortgage brokers, they can do it, no problem. But if you're new and you're missing something, you're growing your business, it's completely possible to miss something and somebody makes a big decision that they're not qualified for. And that's what the AI agents are going to take over.
I mean, that doesn't sound so bad if that's how the AIs are helping out. I guess, we'll see how quickly it ramps up. We'll see what, FSRA and the governing bodies have to do with it. I mean, look, there's another way around this problem, and it's called a financing condition. Because once you have a financing condition, then it will start to get underwritten. And if you miss something, it'll get flagged and you don't really get anybody into trouble. Although, time is money. And you can't be wasting people's time nonstop.
If you have the best rate out in the market right now, and your turnaround times will almost always be longer than what the financing condition is good for. So you're doing a financing condition, 5 days is the norm, but I'll get calls like, hey, can you do this in 2 days? Like, maybe that's possible, but it depends. Are we going to the lender that has the absolute lowest rate? No, because they're going to take 8 days to take a look at your file. They're not going to look at it. Then the condition of financing is unrealistic.
You can't meet it. Yeah, that's a really good point. We've had definitely some of the credit unions in the past have offered incredible rates, but their turnaround times are over a week, like 8 days, like you were saying. And back when Toronto was the market on fire, you couldn't put a 8 to 10 day financing condition. The offer wouldn't get accepted.
Yeah. So if you are a lender, you're going to reduce your turnaround times. You're going to reduce the amount that costs you to view those files, right? Because you're not paying people as much. You don't need as many people. You need a handful of the best underwriters and to keep the files moving. And then we're also not waiting for, is this being accepted? Is this happening? Like we're getting into this mode of like, what is this done or not? Like, because we're waiting in a queue for a single person to review these documents. This would all be instantaneous. You can provide then real solid advice and wisdom essentially to your clients based on, hey, this is going to happen. I've got the go ahead. We've already reviewed everything. And that's where, and NVIDIA, I don't know if you heard them, are a chip manufacturer for computer chips. They've said this year is the year of AI agents, which are these agents that are going to do these tasks, interact with our calendars, our emails, and our systems. That's the future. And it's here. It's just a matter of like when it infiltrates full bore into the mortgage business.
Well, Sean says, don't fear the Reaper. I'm not so sure. But let's put a pin in that for now. That's a good topic to come back to. And as it develops, I think that there's going to be a lot more to explore there as well.
Absolutely.
Maybe one more thing before we get out of here.
Yeah. Next week, we've got the Bank of Canada meeting, and we won't be going live. That's always what people look forward to, is our live presentation of the Bank of Canada rate meeting. What's the markets are not expecting any sort of rate decision. It's about 24% chance of a 25 basis point rate cut and 76% chance of zero cut. What's your can we expect a surprise?
Cool. I wouldn't suspect a surprise. Economists say that the job of Bank of Canada is to fight inflation, and if inflation gets sticky, don't expect a rate drop. So,
Yeah,
it's not. I don't think it's pessimistic. I think it's just realistic that at this time, and I think that we're still, as most economists are predicting, and I agree with them, that we'll still see 50 basis points by the end of the year. But I just don't think we're going to see it on June 4th.
yeah, I'm not even so sure we see 50 anymore. I think, I just think that the way that bond yields have been rising, that there is a lot of upward pressure on interest rates right now. There's upward pressure on inflation, tariffs, uncertainty. The US Federal Reserve has not lowered rates and is in no position to be lowering rates. I just can't see, if it's 50, I'll be surprised at this point. I think anything above that is off the table. I think even another 25 basis points is like, we're in maybe territory for that. To me, I think this is where we're going to be at the end of the year.
Interesting. I mean, June's a halfway point, right? Halfway point in the year. There's a lot more year left. There's a lot more ups and downs. I think that we will be on a bit of a roller coaster ride in terms of at least the news, at least headline news, whether the impacts are going to be there or not. Tough one to predict, but I think we're both saying for next week, status quo.
Yeah, no cut at all next week.
I agree. Anything
Let's
else
do it. Let's
into?
wrap it up. Yeah, no, I think that's a good spot to end it. But yeah, if you like the show, please go ahead and subscribe, like the content, comment. We'd love to hear your takes on our topics as well. And tell everybody you know to watch the Mortgage People podcast. Hit the subscribe button, and we'll see you next time.